Good morning everyone, and thank you for joining us on Morning Markets from True Potential. Today we wanted to build on that discussion from yesterday with Chris, where we've continued to see asset markets perform well, and by that I mean the equity markets in particular continue to move in that positive direction. Whilst it's hard to pin a particular theme around that, we discussed some of the broader aspects yesterday. We continue to see some of those themes yesterday with central banks across the globe, really, or individuals representing central banks, just talking about a number of points that I think are worth drawing out. How markets have moved quite aggressively when we look back over the past 6 weeks to price in interest rate increases, but also how that has fed into expectations as well. And really we've heard from the Bank of England's chief economist yesterday discussing that more interest rate increases are likely, but that the pace of those needs to be considered, and also that they need to be data dependent. And I suppose there we've got an indication that through that, by inference, that the markets moved ahead of where maybe the central banks thought they would get to. And then in the US, we've talked about inflation. A number of Fed officials yesterday discussed the fact that they think and they expect inflation to ease as we progress through the year, as supply chain bottlenecks are alleviated, and also as we see demand trends returning to more normal levels. I think the other thing on the demand side of things, it's just worth noting that yesterday we heard from Maersk, the largest shipping container line in the globe, and what they talked about was really an improvement in supply chain challenges, and highlighting that in the second half of 2022 they do see a material improvement in that. And that will be a very important aspect for businesses across the globe, because shipping costs have been one of those key areas where we've seen significant inflation in recent months. So that's certainly something to monitor going forward. Looking to the day ahead, really the main focus from asset markets and market participants is certainly going to be around the US inflation reading. If we think about where we are, we're sitting at 7% was the December reading. Market expectations have us coming in above 7% today, so 7.3% is the level that economists are expecting. I think if we come in above or below, we'll certainly see an interesting reaction in asset markets, because that's really the key determinant of how people are assessing the implications for monetary policy. If we see a higher reading than 7.3, we would expect and consider that asset markets would price in potentially a more aggressive action from the Federal Reserve in the US. A number coming in below, I think, would be taken positively, and it might speak to some of those trends that we're seeing, i.e. certain areas of that inflation basket starting to roll over. But we'll certainly report back on that tomorrow. Just looking at how asset markets have opened up in Asia overnight, but also in Europe this morning, very much a subdued feel to them. I think everybody's just looking ahead to just after lunchtime UK time when we get the UK inflation number, and we'll report on that tomorrow. So please do join us then. And many thanks for joining us today.
Subscribing to the True Potential YouTube channel is quick and easy. Simply go to the channel on your desktop or through the YouTube app on your phone and click the subscribe button. You can then press the notification bell symbol if you wish to be notified as and when new videos are released. Doing this is a great way to keep yourself updated with market developments and personal finance insights. Thank you to everyone who has subscribed, and we look forward to continuing to help you do more with your money.